How's it going, everybody? Hope you guys are doing well today. It's nice to have you again. What are we dealing with today? Thursday, June 16, 2022. Today's going to be an interesting session. We're going to take a look at what the banks are not telling us about the markets. I found an interesting article here. Wall Street Journal, U.S. bank executives disagree on likelihood of a recession. So you got Goldman Sachs. I think this is among, if not the most complex, dynamic environment I've ever seen in my career. JP Morgan Chase. That hurricane is right out there down the road coming our way, Mr. Diamond said. We just don't know if it's a minor one or Superstorm Sandy. You have to brace yourself. It's going to be hard to avoid some kind of recession, Wells Fargo. Citigroup, Europe is headed for one. Morgan Stanley CEO James Gorman said Monday that the likelihood of a U.S. recession is 50% based on historical experience, but that he is pretty relaxed. Oh, of course he is, sure. Goldman CEO David Solomon said that odds of a recession or weak economic growth are reasonable. If you're running a significant enterprise, you have to be looking through a lens. A little bit more caution right now. You might have been when you were sitting here a year ago. And Microsoft Corp recently said profit would be lighter than expected because of the strong dollar. Well, there is no strong dollar. So interesting choice of words there. Expects charge-offs and delinquencies among his customers to remain below pre-pandemic levels. And then Bank of America growing faster than inflation in all categories besides gasoline regarding this month spending. So those are some of the headlines coming from the bank CEOs. The funny thing is, if you look at those banks and look at who owns them, it's all the same people. Okay? It's all the same people that own those banks. So interesting how somehow these CEOs all have different perspectives, but their bosses are all are the ones that are creating this this situation that we have in the economy. I mean, who's cutting off gas pipelines? Who's cutting off the gas pipelines? All right? Who's putting sanctions on Russia? Right? So, I mean, who's doing all that? It's not us that's doing that. And so who's got the ear of the president? You could imagine. So, yeah, so there's kind of mixed opinions on whether or not they're creating a recession. They're creating it. I mean, we've seen the last 2 years people lose their jobs, lose their businesses, and values of properties increasing. So how many people got mortgages refinanced, right? And then you have so-called advisors coming out, so-called experts coming out telling you should put all your money into Bitcoin. That was great advice, wasn't it? Yeah, put all your money into Bitcoin. I would refinance my mortgage. I would refinance my business. Anything you got, any equity you have, buy an asset that's just about to drop. And you had Jamie Dimon coming out saying, oh, we see it, going upside from here. That was when price was above 30,000. He said that he saw Bitcoin going up from here. We only see upside from here on Bitcoin. That was at 30,000. It's lost 1/3 of its value. Can you imagine? Basing your trading and your investment decisions off of these people. So, in terms of Bitcoin, this is the chart that we care about. This is the chart that we've been looking at for quite some time here. Nothing else is really important except for this chart. I would not look at any other chart. I would not look at any experts, listen to any experts, hear what anybody has to say, because none of it matters. Absolutely none of it matters. Because if you know how to track the institutional trading on the charts, then you don't have to listen to the experts. You don't have to base your trading decisions and your investment decisions off of what these guys have to say, because you could see what the banks are doing. And what you'll find is that vast majority of the times what the banks are doing with price on the chart and what they're telling everybody is the exact opposite. The exact opposite. Okay? So they have, you know, their stooges like this guy here who works for them, who works for the same people that own, you know, the vast majority of all the major corporations. BlackRock, Vanguard, this is their puppets. What did he say a few weeks ago? Charts suggest it's going to be a very nice summer for stocks. Very nice summer. And what's the headline today? Dow falls 700 points, tumbling below 30,000 to the lowest level in more than a year. Yeah. So much for him, eh? Like, how is this guy still on TV? If anybody else had such a poor track record, they'd be fired. Well, why do you think he's still on TV? Because he's doing his job. He's doing his job. So when we look here at the chart of Bitcoin, there's nothing to stop price to get down to this area here. That's, you know, low teens. 13,000, 12,000, 10,000. There's nothing to stop price from going there. And we've told members this for a long time now. April 9th, 2022, I put my target there. April 9th. April, May, June. We're in June now. Okay, 2 months ago. That was our target. I said I would not be buying Bitcoin. This is where I see Bitcoin heading, based on the supply and demand from the institutions and what the banks are doing. And then you just take a look at what they say, and it's like reconfirming. The more the bank CEOs come out and say that price is going to be going up from here, it just reconfirms that price is going to go down. So Bitcoin, I would not be a buyer of Bitcoin. I have a friend who's invested in Bitcoin. I had a conversation with him the other day when Bitcoin was sitting in the $30,000 area. I told him, listen, if I were you, I'd be taking some profits on my position. You know, if you wanna hold another portion in case price starts rallying, it's very low odds that's what's going to happen. But if you do want to do that, great. But I would start taking some profits. And I would only get back in if price got into the $10,000, $11,000, $12,000 range. And not when it first comes into that area. You wouldn't want to do that. You don't want to, the second price of Bitcoin gets into $10,000, you start buying. No. Would not do that. Because what's going to happen is, you know, let's say this is a chart of Bitcoin. We got $10,000 here. $10,000 to $12,000 range is here, okay? What's going to happen is, you know, we're going to see the banks drop price into it, into that area. Now, how are we going to know if they're going to start buying? Well, they're going to create chart patterns. They're going to create certain types of candlesticks on the charts that are going to represent them coming into the market and buying. So I wouldn't buy the second that price gets into that area. I would wait until they start creating those formations off of that area to signal that they are indeed coming into the market and buying. All right? There's going to be areas of major supply, major selling that's going to come into the market to push price down there. And we're seeing it now taking place. And so when those areas get absorbed with buying, then that will be the signal that they're going to start taking price higher. So that's what I'm going to be watching for with Bitcoin, okay? Because there's more to come, more downside to come. I don't see why this one would reverse and head upwards at any point. Okay, let's take a look at gold. Gold daily chart. It's just kind of sitting, doing nothing for quite some time now. Most of May, now June, just sitting sideways. On the weekly chart, this is what we got. Major range since July 2020, just sitting in a range. Now, we've had the initial move to the downside in gold that we had forecasted. Okay, we got to here, and we see a lot of manipulation. Okay, we see a lot of manipulation. Have you guys taken a look at the data? I know many of you are new here, so I'm just going to point out where you can find that data. If you come to our website, whiteoakfx.com, click on blog. We just posted, where is it? Right here. Okay. Based on the commitment report data from June 7th, you come here, and there's, look, I'm giving you liquid gold here, okay? This is gold right here. I'm giving you the positions held by the banks and the supply and demand on the higher time frames. And we laid out in our video on YouTube about what's been taking place here. Taking profits on long positions. That's the overall theme that the banks have, okay? They're profiting from long positions that they gathered from much lower, okay? They'd be closing positions. But during this whole process, they don't want retail traders to jump on board with the moves that they expect, that they are creating in the market. They don't want it. So they rallied price up because of the headlines. Okay, they rallied price up with the war in Ukraine headlines. They got everybody excited to get in long. When everybody got in long, they've dropped the market. Okay, and then they dropped it some more down to here. And then when retail traders said, okay, enough is enough, let's just get in short, now they pushed it back up again. That's the game. Over and over again. So what do you think is next in the game? If the last thing was to push price upwards to get them out of their shorts, what's likely going to take place? They're going to get into long positions again, correct? Right. And remember, you know, if you took a look at the last video that we did, we showed you how they were getting into short positions down at the lows. Now, look where we're at now. Okay? You see how predictable this is? You see how predictable this is? Now they're getting into long positions as price is rallying up. So what do you think the banks are getting ready to do? I mean, it's, you know, it's just the same thing over and over again. So we go back to the gold chart. This is what we have. Okay, they were getting in long, so now look what's happening on the charts. We see the push to the downside. And this is a significant push to the downside, I'll tell you, because we have an area here that the banks created of buying. This buying caused price to get to these highs here. Now, if they were interested in pushing price even higher, they would have come back down here and used this area to facilitate a bigger move. But look what's happened ever since they dropped price back into their buying area. Does it look like they're establishing more long positions there? No, not at all. Not at all. Okay? So just as retail traders are getting into long positions on gold, what are the banks doing? They're preparing for a drop. They're preparing for a drop. So be aware of that, because if you trade gold, you need to know that. Okay? So that is gold. Now, let's turn over to oil, because this one's a very interesting chart. Very, very interesting chart. Here's the chart I like to focus on here. And this is the chart I've been focused on over the last many weeks. Many weeks. On oil is this daily chart. What is going to happen with oil? So oil has entered into this range on the daily chart, and we have institutional selling here, up here, and we have institutional buying down here. Now, we're watching something very specific, and I've shared this with members. It's something that we teach. It's one of our heavily guarded things that we keep for members only, but it's an extremely, extremely powerful indicator that will tell us what's very likely with high degree of certainty going to happen in the future. All right. And so as you see, I have a red box around here. And you see where the edge of this red box is. And you see a downward pointing red arrow. Now, here's what's happening. Okay? And I can assure you, nobody is looking at this. Nobody is paying attention to this because nobody has any clue about this. We're watching to see if the price of oil drops within this red square before the red square ends, the red rectangle ends. And I want it to get below that alert line that I have at 107.65. Okay. Now it seems like absolutely nothing. Oh, all right. So price drops below that alert. What's the big deal? Well, I'll tell you what the big deal is. Okay. I won't tell you why, but I'll tell you what the big deal is. Big deal is this. If by the end of this red rectangle, which is the end of June, if oil drops below that alert line, what we foresee taking place in the future, over the long term and very long term, is oil, the price of oil will be dropping, okay? Based on what the charts tell us. Not based on anything else. Not based on, what's happening in the markets, the oil supply, the pipelines, all that stuff. Regardless of that, regardless of oil not coming in from Russia, all that stuff, regardless of all of it, if price drops below that line over the very long term, we're likely going to see oil come down in price. Okay? And you might say to yourself, why would they do that? Why would they do that? Well, let's take a look at oil. And we see that they dropped price back in 2020, right, to below zero. Remember that? And it's been nothing but uphill since then. And as you can see, 2021, you see how as price was rallying up, we had very aggressive long positions. What's been happening? 550s, 500, 465, 411s, okay? A slight increase here in long positions, but overall the theme has been profit taking on long positions. Look at shorts. They haven't even been focused on shorts. Shorts are cooled off. Their positions are cooled off in terms of shorts. So the main focus that they've had is focusing on taking profits on long positions. Now, they've been able to maintain price at these highs pretty decently, very decently. And it's probably, from a lot of investors buying oil. You have Berkshire Hathaway coming out, investing in oil stocks. Excuse me. And so, all the headlines are suggesting that gas prices are going to go higher, oil prices are going to go higher. So I can understand why a lot of people would be buying oil here. But what we've seen over the very long term, okay, over the last year, is them taking profits on long positions. So I wouldn't be surprised. It wouldn't surprise me to see a drop in oil, especially with the indication that we have here on this daily chart. So we'll keep you posted on whether or not price does close below that, and then we'll continue to monitor the chart of oil to see how it plays out. Okay, the rally from this weekly area of demand that played out just as we had suspected it would. Came into play, big buying from the banks. And as you can see, price hit these highs, failing to reach above those highs, and now we're getting a bearish engulf being created here. So this is all indications that we're likely going to see a drop. And so it's been happening on this daily chart so far. Okay, dollar, we get a little bit of a push to the downside here. I was talking to members about this yesterday in the forum. Level 2 members, we study the structures of price, we study trends, and we discuss the importance of understanding the value of understanding good structures and understanding trends that the institutions are creating. Okay, there's a difference between just your average trend, what your typical trader would call a trend, what your typical book would call a trend, and what is an institutional trend. Because the institutions create the trends. Okay, they create ascending structures and they create trends, and it's two different things. Ascending structures usually will be mistaken as a trend when in fact it's not. All right. So on the dollar, you know, a lot of traders would look at this and say, yeah, we got an ascending trend line here. The dollar on the daily chart is definitely uptrending. Okay. But like I warned students, I would not be saying that there's an uptrend. And how can that be? I mean, it's been so strong. It's moving up. It passed the previous highs and all that stuff. Okay. I know you'd be thinking that. The average person would be thinking that. But there's many factors involved here why I would not say that. So this is weak. This is a structure to the upside, but it's very weak. Okay? And, you know, just look at the weekly chart. Just look at the weekly chart. Did it make a new high? Yes. Did it close past that high? Not yet. Okay? And we're on Thursday. We got today and tomorrow. If price gets up here and closes above, okay, decent. If it doesn't, that's a problem. That's a problem. Then we're likely going to see price drop next week. Possible. That's one of the indications I would be observing to be able to indicate to me what's likely coming with the dollar. Okay? So I've been looking at that as well. The SPY. Look at this baby. Look at this baby. Okay? It's dropping. It's dropping hard. And it's going to continue dropping hard. What's about to take place in the market right now is very significant. And we've been warning our students, you know, over the very long term, this market's dropping. We have our targets much lower in the markets. Much lower. So this is extremely powerful what's happening today. This is extremely powerful what's happening right down here, right now. Because by the end of today, from what I'm seeing, a very significant area of buying that the banks created in the markets is about to be removed, which tells me that the banks are not going to be interested in keeping this market up at these levels. So once price breaks through these areas and heads lower, there will be some kind of a pause. There will likely be some kind of a retracement, and this will be the most ideal time to get in short. So you know, you look for these opportunities in the markets that are just like super amazing opportunities to make good money, good returns. And what that opportunity is going to be, and it has been, I've already entered into a short position and took my profits on the way down, and just been waiting for the next setup. And it's setting up, boys and girls. Right now, it's setting up. Once it drops, creates a base, and rallies back up so that the institutions can fill in more of their short positions. I mean, mark my words, what we'll probably see after this drop in the pause, there's going to be headlines coming out with a lot of positivity, and then we're going to see a rally up. And what's price going to be rallying up into is areas where the institutions are going to be ready to sell this market. And the headlines are going to be very positive. They're going to probably insinuate that the markets are going to be very strong from here on in. And as investors think that they're getting a really good deal, buying this market low, they're just going to push price right into a selling area where the banks are going to come in and just hammer them. Hammer. And then the amount of momentum you're going to see in this market when it drops is going to be incredible. So I'm looking to enter into big positions once this takes place, because I know that the chances of this happening, you know, after a rally up, a very big, strong move to the downside, the chances of it are going to be over 80%. Okay. I could even say 85 to 90%, but to be conservative, I'd say 80% chance. Very strong move to the downside. So now what I want to be focused on is I will short the SPY. No problem. I love the SPY. SPY, the chart's looking beautiful. I love it. I will short it. But what else do I want? Well, I want to look for charts that have a lot of downside. Berkshire Hathaway is one that I love. Okay. I got in this one too early. I got in short here with the expectation it was going to drop like this, or at least like this, and it rallied on me instead. So I got out for a small loss here and just been waiting for the next spot to get in. So if we get this drop in the SPY that I see coming right now, and then a pause and then a rally, I'm going to be looking for areas where the banks are going to be interested in selling this one. Berkshire Hathaway. Okay, so that's one on my list. Amazon, we've talked about Amazon for some time now. This is potentially capable of dropping, although there are aspects about it that I don't like on the chart. What's another one that I like? eBay is another one. There we go, eBay. Okay. This one is one that we see dropping. May 16th, I put my target at 36.62. May 16th, 36.62. I made that available to members. I said over the longer period of time, this is where we expect price to go. So again, if the market drops, pauses, and rallies, as long as my target hasn't been reached, I'm looking for areas that I can get into short positions on this one. Google, this one's got room. I've got targets too, 1500, as you can see. Target was one I was looking at. Yeah, we got you see, we got May 24th. I put a target of 130. And Tesla's been one that I've been looking at. Tesla, I like Tesla. Did you guys see what I posted? Let me see if I can bring it up for you. Here we go. Tesla. So Elon Musk has been selling a large portion, I think $8 billion worth of shares. Okay. And I marked them right here. This is where he was getting out of $8 billion worth of shares. And, you know, and he did that at the highs as well, too. So why do you think he's doing this? Well, it's likely that this is going to drop. Yeah, it's been holding quite nicely for a while, but the charts are indicating that it's going to drop. There's really nothing to stop price from dropping. Okay? And so when you look across the board, there's so many CEOs, so many directors, and they're all selling the shares of their companies. Okay? And it all comes down to the fact that they know that the markets are about to drop. Somebody's giving them a heads up. Plain and simple. Somebody's giving them a heads up. And when you look at who owns these companies, it's the people who are creating this economic turmoil. So, of course, they understand where the markets are going. And, you know, as a little bonus, like I've said before, as a little bonus for these CEOs for doing such a good job listening to their masters, they're given a heads up of when to buy shares, when to exit shares, when to take profits, all that stuff. So that's what I see taking place. Okay. One of you wanted to see NatGAS. So let's see which one. Is this a good chart? Is this the chart you want to look at, NatGAS? It's sad the way Dynamic FX writes. It's sad the way the media manage the narratives to mislead investors. Yeah, because, well, in an honest world, it wouldn't work like that, right? But when you have BlackRock and Vanguard owning all the major media corporations, and they own the companies, and they control the markets, and they move the money, and they, you know, they run all the banks, all the technology companies, all they're doing is creating a monopoly for themselves. And yeah, it's unfortunate, but that's just how it is, right? That's how it is. So natural gas. What do you want to know about natural gas? What is there to know about natural gas here? It's trending upwards. There's not much to see here. It's trending upwards, you know. And if it was to come down, I'd be a buyer in this area here over the very long term. Otherwise, what else is there to see here? Nothing really to see. It's an all-time high scenario here. Yeah. So not much to see here. Okay. The daily trend's already broken. Weekly trend is still holding, and monthly trend is still holding. So best spot to buy would be the $5 range if it were to get down there. And it's possible that it gets down there. It's possible. Weekly bearish engulf looks like it's about to form. That indicates a drop. Okay. That's pretty much it, ladies and gents. So I think that was good. We talked a lot about what to keep our eyes on in terms of the markets, gold, oil, what the banks are telling you, and what's actually taking place. What they're saying based on the, you know, their messaging through the media and through these heads of the banks. Because you think, oh, the banks, they know, right? The heads of these banks, they must know. They must have some indication of what they think the markets are going to do. And they come out and they're like, yeah, you know, we think that there's a slight chance. You know, they use this language to indicate that, you know, they're speculating. Meanwhile, they damn know well what's going on. Okay? There's no doubt in my mind. They know exactly what's going on. And they have to balance, you know, what they come out and say. Some of it has to be true. Some of it has to be not true. Information that they pass on to their clients, some of it has to be true, some of it not true. Because these newsletters and stuff that they make available to members, there's people that take that information and they post it online. So, I mean, if it was always garbage, they would lose clientele and people would stop listening to them. So they have to give you some good information, but their innermost clientele, they're like highest of highest clientele, the ones that they don't send out, you know, newsletters that anybody can just sign up for. The information that those people are getting is a completely different ballgame. Completely different. So just be aware of that, okay, guys? Like I said, the overall theme here with the markets is price is going to drop heavily. And so we're just waiting to see if something is going to happen. It'll take probably the rest of this week. If it doesn't happen, maybe next week. But within the next week and a half, we'll be sure about the medium to long-term direction of this market. So far, the odds are, you know, 70, probably 65, 70% chance that we're going to see downside from here, medium term. And then market will pause, we'll get some kind of a rally, but over the very long term, this market's dropping. And I would not buy Bitcoin. I would not buy the market. I'd be selling everything, selling Bitcoin, selling the market, selling stocks. Don't, you look at these newsletters and they're like, oh, this is the top picks for stocks that you could buy in this weak market. Don't buy stocks in a weak market. It's just not a good idea. Okay. Because even if the stocks do well, like a lot of people are saying, oh, Dollar General, like, oh, that's the wonderful news. That's the wonderful stock tip that one of the bank CEOs came out with. Oh, I say buy Dollar General. Because when this market drops and everybody's losing their jobs and gas is so expensive, people can't drive anywhere and visit family members or go on road trips. They're going to go to the dollar store and they're going to buy their food there. They're going to buy their essentials there. Yeah, that may be the case. But look at this chart. This chart is ugly. This chart is very ugly. Is it moving anywhere now? No, it's not. So would you want to speculate on buying Dollar General? This chart is ugly. There's nothing here to tell me to buy. I want clear, concise charts. I want to know high probability what the banks are doing. I want to know what the narrative is that they're putting out there. And I want to see what they're doing with the actual markets. Clearly on the charts. Where are they buying? Where are they selling? What are they doing? Are they creating trends, not creating trends? Are they removing areas where they used to be buying? I want to see it clearly. If the charts aren't clear, I'm not interested. If I clearly see them doing the exact opposite of what they're advertising in the media, I love that. That's what I love. That's the highest probability trade. To go against what they advertise in the media with charts that are clearly indicating that they're doing the exact opposite. Christopher writes, I own shares in Bank of America, Pfizer, and Raytheon. Can you look at the charts? Not too good at seeing institutional traders. Okay, well, we'll end by doing that. Bank of America, BAC. Yeah, it's one of the charts that I follow. You own shares? You own shares. Okay, well, it looks like to me that we had major selling up here. The 50 area. I don't know what's your average size? You want to share that? Like your average position? Is it high, low? Because, we had some sort of a upward structure here, which came to an end when this area up here was contacted. We've since had an institutional area of demand get removed. So this is very weak. Alongside with the market weakness, we are expecting price to drop down here. Why? Because the institutions are not keeping an ascending structure here in play. So I see weakness. Okay. I see weakness in this one. And it can drop down to probably down this area here. I'd say between $20, $25, $26, $27. And then possibly rally up from there. It depends where the markets are, the indexes are when price gets there. But that's what I would say, rough look. You own Pfizer. You own shares of Pfizer. So this one we've been looking at for a long time too. And yeah, I'd say down this area, very, very good chance that we can get price to drop down to the 40, 43 area from where it is now. Very good chance of that. It has been holding quite nicely here. But it's hard to say with Pfizer because there's been a lot of stuff, negative stuff about Pfizer, okay? Their clinical trials have come out and, the data is really bad, really bad. It basically shows just how criminal this organization is and what they're up to. And it really indicates to us that the FDA was hiding this information because they had access to these reports, which clearly stated you're very likely going to have bad side effects. 2,500 different listed diseases that you can get from their shots. So they put out warnings to their shareholders about this. So what I'm seeing on the charts is, yeah, we're in a range right now on the weekly chart, but if this range breaks to the downside, we could get price to go down as low as the low 40s. But if low 40s get taken out, then look between 33 and 38-ish, around there, for a long-term move to the downside. Okay. But I would suspect some more weakness here. In your last one, Raytheon Technologies, I don't look at this one. But let's take a look at the chart. Okay, we do a little bit of analysis here. It looks like it'll drop down to this area here. 80, 84, 85 range. Looks like it'll drop there. And if it holds, if it drops there and then the markets contact institutional buying areas and we see momentum build to the upside, then this can easily start heading up from there. Raytheon, who owns them? What do they do? Aerospace defense company, provides systems and services for the commercial, military, and government. Ooh, wow, serious business. You got in at 57. Well, if you don't mind holding it as it drops down to, at least mid low 80s, that's good. But if 79 gets taken out, I would take my profits, because then it can drop much lower. Yeah, it could drop much lower. So it looks pretty good for very long-term move to the upside. It looks good. But if like I said, if like that 79 area gets taken out, I would want to take profits and then only get back in once, after it drops, settles down, and then starts creating upward structures on lower time frames. Then I would look to get back in. Otherwise, if you're a very long-term holder and you wouldn't mind absorbing the loss or absorbing a drawdown on your portfolio, it could drop from 50 to 60s, or sorry, from 90s to 60s, 60, 70 area range before it starts going up. It could do that. But nothing to suggest that, you should be like freaking out and getting out now. No. If you could sit pretty, yeah, sit pretty. No problem. Okay. All right. Very good. That's it for now. I hope you enjoyed the session. I enjoyed it, as I always do. You guys are on the same page with what I am observing, what I am focusing on. So hopefully you can navigate through these waters without being eaten. And that's it. If you're looking to learn more about the markets, you want to know about the structures, you want to know about the supply and demand, how to draw them, why we draw them, the thinking of the banks, how they move price, all that good stuff. Okay? You want to take your trading to that next level, let us know. You can come to our website, www.whiteoakfx.com, top right-hand corner. You can click on members, services, membership options. You can see our membership options. come join us, even for 3 months. Join us for 3 months, because the price of student membership is going to be going up very shortly. Join us for 3 months. Check it out and see what you think. If you like it, great. If not, that's it. It's a 3-month investment. But I'm sure if you're a serious practitioner of the technical analysis, I'm sure you'll appreciate what we have to offer. All right? Hit the like, please. Make sure you like the video. I appreciate it. You guys have been giving me a lot of love lately, and I really do appreciate it. Hence why I give you the information that I do. So I really appreciate any love and support you give me. All right? Enjoy. Be good. Don't freak out. Just do what the banks do, and you'll make money during this whole process. All right? Take care of yourself, guys, and we'll see you around.